Hey, good morning, everybody. Welcome to the first day of December 2020. Hey, I hope you're doing well today as we get ready to look at the markets. We're down a little bit yesterday, maybe a little profit taken at the end of the month, who knows? But looking like a little bounce this morning that Dave and I will talk about coming up here in just a few minutes. But let me remind you that right now, with the markets where they are, if you don't know how much risk you have in your portfolio, that can be detrimental to you, especially if you're 10 years out or less from retirement. Hey, give me a call at 863-382-0037 to schedule your financial x-ray to determine how much risk you have to make sure you're on track to accomplish your retirement. Hey, Dave will be with us here in just a second.
Oh, 0.7 Light FM. We're at 840 here. It's 20 before 9. This time every morning we double check on your money and see how it's doing up on Wall Street. Yesterday was not a very pleasant day, but November was a real pleasant month. Let's go summarize it all and try to explain the whys and wherefores. Downtown we go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. You're right, man. November, I believe, if I saw the headlines right, was a record-setting month. Not seen anything like that for quite some time, if at all.
I think it was during the recovery coming out of the recession in the 08-09, coming out of that recession. Had a month like that. I didn't see percentages, but I got to assume we're looking at double-digit growth on the indexes, weren't we?
Yep. So I can give them to you. So we had the S&P 500 up 10.75% for the month of November. The NASDAQ was up 11.8% for the month of November. And the Dow was up 11.84% for the month of November. So some huge numbers there.
Absolutely. That's the kind of growth you hope for across an entire year, and we ended up seeing that much of a recovery inside of a month. That's amazing. I mentioned yesterday was an off day, and you and I were kind of noodling it through before we went on the air. Dow was off 272 yesterday. NASDAQ was off 7, and the S&P was off 17. Not a barn burner losing day, but it was kind of an exception, and we were both kind of thinking, well, this has to be the big money guys balancing things before the end of the month.
Well, yeah, I'm sure there's some rebalancing in the mutual fund world, taking that in consideration. That may have pushed some pricing down a little bit as they sold some of their winners and reallocated into some things they think will do better this next month.
You know, I didn't mention this before we went on the air, but one of the things we don't talk about very much is the really small stocks, the Russell 2000. And while we were going through that run-up and we were looking at daily highs and record highs for the Dow, the NASDAQ, and the S&P, even the Russell 2000 managed to get all the way up. I'm wondering if we're starting to see an investment shift into growth stocks on the part of some of these funds.
You know, it could be. Especially in the small to mid cap stuff, though, I will tell you that in one of my portfolios, the rebalance was actually a little bit more value than we'd seen in the past.
It's intriguing. I hadn't even looked at the Russell for some time because it had been lagging so much with everybody flying to quality. But doggone, even the riskier stocks in the marketplace are actually going crazy. This is just turning into an investment party in the face of a pandemic.
Well, you're right. It is right now, and it may continue. Nobody really knows. Nobody's got a crystal ball, but definitely that's why it's important that we have some risk assessments so that we know how much risk we have and what will happen if the market starts to tank again.
And that's the part that's always the risk. I mean, there's a lot of slips between the cup and the lip. Moderna, Pfizer with their successful vaccine tests going through the federal government and hoping for a distribution decision. Yesterday, Vice President Pence was on a conference call with governors and said, yeah, we could be administering vaccines by a little after Christmas. And that all sounds really, really good, but there is so much junk that can go on that could go wrong. Knowing how much risk you got, and a little bit of risk money is probably good because if it's skyrocketing, it's good. But boy, if you don't know how much, that's a problem.
It really can be. So, I mean, I think people need to take the opportunity now to really determine how much risk they have in their portfolio and then go from there. I mean, we don't have, today, you and I were talking before we went on there, there's just not much out there today as we head into to December, we have some stuff that'll come out tonight or after you and I get off the radio. Construction spending, and then tomorrow we'll have ADP jobs come in. So we'll get some economic numbers that will give us an idea of how is the economy really doing. I mean, the market had a good November, but how was the economy? Because there's sometimes a disconnect between the two.
Absolutely. The one bit of economic news that came out that I heard, and I forgot to mention this before we went on the air, I'd imagine you caught it. China reported their gross domestic product growth. And no, it's not all the way back to 100%, but they overachieved on both the month-to-month and on the year-over-year numbers. Now, we always make fun of China because it's a command-and-control economy, and pretty much the figures come out the way the government says they're going to. But still, it was hopeful news anyway to come out that way.
Yeah, you're right. It was, and so, but you're right. We know that that's not always the real number that we see, and I don't know that anybody really knows what the real number is, but it is what it is, and that's what we have to go off of. So better than expected.
Absolutely, and that's always good news. I mean, you figure China says we grew at 7%. They probably only grew at about 5%, but still, at the very least, seeing them recovering is good. The other tidbit I had out there, and I got kind of a giggle out of this when I saw it go, all of the travel-related stocks having been literally had the crud beat out of them for the last few months, and most of them are still having trouble recovering. When they go up big like Carnival is in pre-trading this morning, something will hit and they'll go back down again. Airbnb decides to do an IPO. That just makes me scratch my head. I mean, I think if I were in their shoes, I'd probably wait 6 or 8 months, but they're saying, hey, things are looking good. Let's go public now, I gather, huh?
Yeah. Well, maybe there's some ownership there that wants to bail out. I mean, I'm sure there's some venture capital there that that may be thinking, okay, we've had our time in, it's time to get out, and if they get the number that you're talking about, hey, they'll be happy, and they're probably willing to take a little less and still be in good shape.
I would say they're offering like 51 point something million shares at $45 a share. That's a boatload of cash, and I kind of wonder what they think they'd be worth if the market for travel was really up today.
Oh, that's true. And if you think about the VCs, the venture capitalists, they probably got $5 to $10 a share, maybe into it. It could be much less than that.
Well, you got a point. They only get 20. They're making 100% of their money back if we use that particular number as an example, right?
Right, exactly. So, that's the thing, is you don't know who wants to cash out and what's driving that.
You got a point. It just seems like a weird timing in the process for an IPO for a travel-sensitive company. You had a couple of things in there, including at least one earning report on a relatively slow tail end of earnings season.
Yeah, we did. Let's start with, and really maybe the only thing I have is Zoom Video. They came out yesterday after the market closed. They had an exceptional quarter, which is what you and I would expect. They made 99 cents a share. That was better than the 76 expected. They beat their revenue projections by about $83 million. So good news there. Now they did come out and their forward guidance called for a slowdown in their growth when it comes to quarter over quarter, which you would kind of expect, just because some people are going back to work now, and so less people are using it or need it as they head back to work. So that could be part of it. But they're trading down this morning 7.6%. But let's look at these numbers, Dave. Their 52-week low, get this, is $62.
Mm-hmm.
Their 52-week high is $588. They open this morning at $442 right now.
I don't think I'm playing a really big violin for a 7% drop in value, even as big as that is, given a good quarter.
Exactly. And we've got some more stuff coming out today after the close. We got like Box.com comes out. We have Salesforce comes out. So we have some of those other companies that could very well be benefiting from the COVID-19 that will report later tonight or first thing in the morning.
All righty. You mentioned construction spending coming out a little later on today. Other tidbits that might affect the market today.
That's probably the biggest one is going to be construction spending. There's the ISM manufacturing index comes out later this morning. And that's one that we kind of look at because that gives us kind of a bellwether of what's happening in the manufacturing industry. And that's really it for the numbers today. Of course, tomorrow you got ADP, and that'll be the big subject of discussion tomorrow.
The employment flood for the month begins starting tomorrow with ADP, then the first-time claims, which will carry a bit of weight on Thursday, and then the proverbial percentage unemployment rate, which doesn't mean a darn thing, but it really affects it affects morale every month.
Yep, and that's really what we got to look forward to the rest of this week.
Alrighty, we're resetting the table for the morning. As we mentioned, down day yesterday on Wall Street without any real cause other than the fact that it was the end of the month. 45 minutes before we opened this morning, Phillip, I'm looking at my delayed quotes. It looks like we're going to take back everything we lost yesterday.
Well, let's take a look. Let's see if my computer will pick up a little speed here and get me where I need to be here. Let's see. We were up pretty good a minute ago. Man, you know what? We may have to go on your numbers here. My computer just decided to give a. Oh, here we go.
Oh,
so
there we go.
Yeah. It's like, okay, what's happening? So we got the Dow up 1%. We got the S&P 500 up 0.95%. You can call it 1% right now. And we've got the NASDAQ up 0.8%. On the commodities front, we're recapturing some money here. We've got silver up 4.3%. That's almost $1 an ounce. And we got gold up 1.8%, back over 1,800 an ounce, 1,813. So looking good there. Crude oil is heading south this morning, down 0.5%, lower than what it was yesterday. It's at 45.12 a barrel right now.
Now that's about 20 cents a barrel lower than we had yesterday. It's staying over 45, which is decent news.
It really is. We kind of appreciate them doing that.
Absolutely. Asian Rim markets had party time overnight because of the Chinese economic figures. They were mostly up by over 1%. Europe is up, but not as excitedly as Asian Rims are today, but both Great Britain and Germany are showing positive signs halfway through their trading day. We were kind of alluding to the risk factor, Phillip. One of the risks is screwing up and losing your identity. You're going to help out with that this Friday down at your offices on South Ridgewood, aren't you?
We really are. We're excited to be able to do our shred day finally. It's been COVID finally pressed back a little bit, but we're going to do it this Friday from 10 to 2. 10 to 2 this Friday. Somebody dropped stuff off yesterday at my office. No, don't do that. Come 10 to 2 on Friday. If you enter off of Franklin Street, we'll have the shred truck back behind my office, and we'll be ready to do that. We'll be doing contactless delivery so that you come right through. You don't get out of your car. We'll have people there to take your stuff up to the shred truck and get it shredded. So we want everybody to be safe and secure, and that's how we're going to do it this year. A little bit different than what we've done in the past, but hopefully next year we'll be back to normal.
I look forward to it every year, Phillip, and I'll make sure I wear a back brace this time.
But yeah, you need it because we put you to work a little bit.
And I'm always proud to do so. Thank you very much, sir. And let's not forget the Statler Financial radio program 3 times a weekend on News Talk 7:30 a.m., 6 and noon on Saturday. This week, 11:30 because the Gator game starts a little earlier, and then 10 o'clock on Sunday morning. Fair enough, sir. We'll see you tomorrow.
All right, buddy. Thanks. You have a great day.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial.
Hey, everybody. Again, I want to thank you for joining us today. Welcome to December 2020. It won't be long. We'll be into 2021, and hopefully that year was going to be much better than the year we just came from. Have a great day. I look forward to seeing you again tomorrow. Don't forget, Shred Day on Friday, 10 to 2 behind my office. Have a great one. We'll talk to you then.